Welcome traders. Thank God for another day. So today I'm going to break down the market, and I'll also be giving a serious nugget towards the end of this video. So stick around and you get that golden nugget. If not, it's cool. But I'm going to break down the market and what I believe is going to happen next. So sounds good? Let's get into it. So first of all, let's go to the monthly chart, right? I think it's important that we notate what's going on in the monthly. And if you notice on the monthly chart, we ran into pretty much a series of up close candles, and we've fallen short of this level I did expect us to go into. I don't think that that party has been dismissed. I do feel like we are still going to trade up in there and maybe potentially even run these highs, but some healthy retracement is necessary, right? So nonetheless, we hit a monthly order block, and we've seen the rejection after that. Now we're going to drop all the way in here. I don't know about that, but there's a level to watch. I'm personally expecting. I'm going to show you what I am expecting. So on the weekly chart real quick. So on the weekly chart, as you can see, we have this liquidity pool right here. And we also have this fair value gap in here. I'm really interested in seeing the market, see if we're going to go in here. I think that's a real possibility that we can trade up in here. There's a liquidity pool here, a pocket of price right there, right? Look one more time. So I like the idea of us, dropping into here and maybe start seeing some type of retracement higher. Let's go on the daily chart. So on the daily chart here, this level also is of interest, right? I mean, we might not even drop in here. Like I said, underlying the economic landscape has not changed. So that being said, the dollar is still going to be leading the way. But in the meantime, of course, some retracement is necessary. And that's what we're seeing so far. I do believe we will drop in here at minimum. Then the question is, do we sink even lower in here before starting to see a bounce? But I'll be very sensitive and watch and see if there's any structural shift when we do drop in here. If there's none, if we keep on dropping through, then here's going to be the next level. So that's how I look at the charts, and that's how I'm going to keep on looking at going forward. But I do like the idea of when we drop in here, of us just coming back all the way and knocking everyone out here, because a lot of people, a lot of big firms would be selling the dollar in expectation that maybe we've topped out. I don't think we've topped. So I do believe we're dropping here. And I mean, this right here will be a break or two. So that's up close candle before this move down here. So, and we've talked about breakers all month. So I like this level. But once again, we'll see what happens when we get here first. Now let's go on the 4-hour chart. So on the 4-hour, once again, another beautiful use of a breaker if you were in this trade. Good job. We've been talking about this PD array all month. And we trade in here, hitting that breaker, and look at that good rejection, right? So I believe, of course, we should come down here. And we have this gap to be looking at. We're going to see how price trades around this area all week. Mind you, tomorrow is midterms. And I'll be honest, I don't have much experience of trading the market during the midterms. So I'll see how that happens. I know something to be aware of. It's on our economic calendar. And I remember when Trump won the election, the market wicked crazily. So I don't know if we're going to have the same type of effect tomorrow. So I'll watch out, see what happens tomorrow. I'll be careful. I might not even trade, honestly speaking, because if you look at that wick when Trump won, it was ridiculous. So anyways, yeah, I think that's what's going to happen. I do like us eventually sometime during the week running above this liquidity. But let's break this down real quick here on dollar. So let's just draw out when the 7 a.m. open on the dollar was. So we had 7 a.m. open right here. Oh, right here on this candle. So that's just open. And And what do we have here? We have this level as a breaker. Well, as the breaker, these are the last down close candles before running up higher, taking out all this liquidity. So you trade it back below. So this is an entry right here on this fair value gap. You've entered right there, and expectations for the market to drop lower. And I did execute a trade on this as well. So yeah, anyways, the breaker again on the small time frame serving as another level where the market rejected from. I know we had something in London session as well, but I'll get into that, I believe, in the euro. So let's go to euro real quick. Euro. Okay. So with euro, I do believe we have reacted off this weekly order block here. I do believe we could punch above here and maybe up in here and then see what happens if we start rejecting again. So on the daily, I think this level is definitely primed to be taken. And honestly speaking, I think we could just punch in here. That's the way I'm looking at the market. Beautiful reaction we had off of this daily, off this weekly order block here. Beautiful reaction. And now we're pushing towards running this high out and potentially this high out. So I think that's what's going to happen, just to knock out some of the firms or some of the traders that are already on the right side of the market. I do believe we will come and take some liquidity before it then starts to drop lower. 4-hour time frame. Once again, look at these last up close candles before this aggressive move lower. Breaker. Look at that reaction here. Boom. So I think we will definitely trade this fair value gap, and might as well take out this highs. So I am expecting higher prices on euro going forward. But like I said, tomorrow is the election, so I don't want to be in a trade where the market just wicks. Like, I don't know what's going to happen. I'll be honest and tell you my experience is limited when it comes to trading the market during midterms. So this level is of interest, however. So if we do start dropping, I will expect to take a buy here and go higher. Maybe in London if I'm up. If not, I'll probably just watch the market. I won't force nothing. It's about capital preservation. You live to trade another day. One day of not trading won't kill you. 1 week of not trading won't kill you. So let's go in on the 1 hour, I believe. Well, let's go on 15 minutes. So 15-minute time frame. Again, remember that what I told you on some of my other videos, the Judah swing, right? We trade lower into the session, and look at that move higher. And then we consolidated, trading lower again into New York session. Then we push higher. I was expecting the price to get in here. I did take some buys both in London session and New York session. So let's get into those buys real quick. Let's see what the buys look like, right? Okay. All right, so these are my buys. I bought in here, sold in here. And I want you to notice it was the high of London session. This London session between 2 to 5 a.m. So this was the high of London zone. So I bought in here, sold here. And why did I even sell that? Honestly speaking, I can't. Let's see if I can just tell you why. Oh, we ran out these highs. There's a lot going on in the charts right now, but there's a reason for everything, right? I'm not just getting out of trade just to get out. I believe around these highs, so I'm going to just drop this liquidity pool right here. I think around these highs, I believe that's what happened. So let's go back and Yeah. So once again, around these highs, and we start consolidating a little bit. And it's really close to 5 a.m. So I expected us to drop lower first before we will continue going higher. I mean, the goal is this, right? When you're in these markets, as once it hits a certain time, you want to be aware of your positions and understand that it could potentially lead to some type of reversal or retracement. And then you can just, continue the same move into New York session if you're if you're able to catch the moves like that. I mean, I believe in myself and my abilities to catch such trades, so that's why I can get out and then get back in. And you see how clean these trades were. So, and honestly speaking, I was just getting out of the shower when I got in this trade. Just getting out of the shower. There was news at 340, I want to say. So I missed the initial move higher. But when it came back in here, there was a fair value gap entry, exit right here. So beautiful trade. You might ask, well, there's no breaker there. Well, there was a reaction off of a breaker. So these series of fast up close candles. So this would have been, of course, a good entry. But after this reaction here, you can either take this trade, which I was not available. I was, like I said, taking a shower. And another entry here, fair value gap here. So these are clean entries. I mean, these pockets of price, fair value gaps. They're good levels to get into price, and we're still on the route to the targets. And typically, once the price starts moving, you don't want to see it start breaking structure or running out liquidity pools. Typically, you want it to move smoothly. And that's what we had. Got out here, and I was done with the trade. Then going into New York session, what do we have again? Another move again. What did I say? The false move. We drop in here, the Judah swing. Boom. And then what do we do? We create a fair value gap in here. Breaker. Get in on this. All right. Went higher. I didn't get out because I knew we should go higher than this high at least. And it came back down. And just start consolidating here. And typically, from my experience, when we start consolidating their highs, while let's just say a similar pair as we around that high, some form of manipulation is going to happen, or they're going to reverse, retrace a little bit. So my experience told me to get out, and I got out there. But mind you, if you did trade the London close, which is between 10 to 11. 10 to 11 right here. I mean, the market just played around before pushing higher. Bounced off of this breaker. I think it's the original breaker too. Yeah, still served the. So I was expecting the price to go higher, but it did it late in the day, and it's okay. I don't have to chase. I don't have to win every single every single trade. And yeah, let's go into S&P real quick. So I hope you're seeing how these breakers are definitely solid levels. And even if you look on the 15-minute time frame, right? Look at these last up close candles here. Let's draw it out. See that? Last up close candles first move lower. And look at that reaction. So very beautiful reactions you've seen off these breakers so far. And again, once again, look at the 4-hour reaction. So this beautiful breaker trading here, push higher. So very beautiful delivery of price that we're seeing here. It's nice to see those things play out, right? Okay. Now, once again, S&P. What's my expectation long term? Let's see. I think we can change this weekly order block. I think that's what we will. The body of it. We've created a daily order block here. And I do believe we could trade above here. That's how I'm looking at the market right now. And notice this is a breaker on its own. All this up close candles, it ran lower, taking liquidity out here, and we start trading higher. So I don't want to make my chart messy, but you can maybe use this last up close candle. You draw that out. and see if we have a reaction there, which we already have, but to propel us even higher. Let's go on the 4-hour chart real quick. Same thing, 4-hour breaker right here, daily order block right here. So a lot of levels there, confluence going on, and we trade to the midway point of the fair value gap on the daily chart. I want to say, yeah. So this line right here, this consequent encroachment, is the midway point of the fair value gap between here and here. So that's a sensitive level, and that's why you notice when I go down to lower time frame, the price did stop there. And I was in these buys, but I got out. It was just playing around too much, and knowing that midterms are tomorrow, chances are maybe would have gone low. I don't know. I like I said, my experience is limited, so I rather watch than do too much when it comes to the midterms. So anyway, this is another breaker right here. These series of last up close candles. So a breaker, a 15-minute breaker within the 4-hour breaker. And look how we reacted here. And notice the reaction around 9:45, and it didn't do nothing till at lunch hit, and then there was a PM session trade, which I had left them. Just came back from the mechanic shop when the price was really moving higher, but it would have been a good trade also if one, I could have stayed in my initial trade. I was in the trade I was in a buy at a 15-minute breaker, an expectation for it to go higher. But then again, I was going to the mechanic shop, and it's a midterm, so I don't care about holding on. But then we had the 5-minute. Look what happens at a PM session. You notice this last up close candle before this quick snatch of liquidity here. So this 5-minute time frame could have been considered a breaker. Look at the reaction, and look at this would have been a beautiful entry, fair value gap, and ran up in here. But once again, I was not around my charts. When I came back, the market was already moving. But that would have been a beautiful thing, because of all that stagnation that took place in New York. Now, there's a nugget I was talking about here. I think it's important. Quickly, I gotta hurry up and go somewhere. So, lunch. This is another way you can look at price. Like I said, the market is like playing chess. So at all times, you want to know where are each side of the game. Where are the players? Where are the buyers and sellers, right? The players are the buyers and the sellers. Those are the players. And then you also have players on the sideline that's waiting to get in. But I want to focus on the ones that are already playing, which is the buyers and the sellers. So at 5 a.m., this is the low created at 5 a.m., right? We're on the 5-minute time frame. So around here, there's a low created right here. There's another way I look at price. Why at 5 a.m.? Well, that's London lunch. That's London lunch, right? That's why I chose 5 a.m. So from 5 a.m. till about 8:20, 8:30. I'm looking at where are the highs and lows. And the high and lows was at this low right here at 5 a.m. from here, between here to here. So now I don't want to press a button until, because now I know the players, there's sellers here, there's buyers here. So when 8:30 comes around, I'm not looking for this. Where's 8:30? Right here. Right here. I'm not doing nothing because we're still in that range, right? I'm waiting for one side of the game to get violated. And especially if I'm ready bullish, I'm waiting for an aggressive down move before we come up higher and take this out. So what you want to do is before every session, you want to see where are the highs and the lows, right? It might be before London session if you're trading currencies. You want to pay attention to where are the highs and the lows prior to 2 a.m. And you draw that out, and then you wait for each side to get violated. Now, if it's against your bias, I wouldn't say just flip biases. Maybe just down the sideline. I like for the market to, of course, show some type of positive correlation between the bias I already have and what I see on the charts. So in this case, we have a low right here and a high right here. So I do not want to see them run the high first, then run lower. I'd rather see them make a false move lower first, taking out the sell side, before then rejecting and going higher. So, and look at it right here again, a little nugget. Let's go ahead and talk about London session real quick. So this is just a little nugget for those that stay and watch to the end, because most people are going to click off. Our generation don't got no patience, right? So their fault, their loss. So this also can help you take away the eagerness, how eager you are to press a button. Look at what happened during London as well. Same thing, right? Before 2 a.m., there's a high and low. You wait. If you're expecting to go higher, you wait for the violation of the one side first. Remember, it's like playing chess. So you need to know where each piece is on the game. You need to know where all the players are. So low, high. I'm waiting for one side to get violated. Once this side gets violated, then okay, cool. We start going higher. I can take buys. If you look at your euro, look at your pound, the same thing happened. And that's why I was also buying, because of this here going on. Same over here. Between 5 to 7 is another time, or 5 to 8, depending on what you know. If it's a currency, 5 to 7. If there is a low during that time, I like to pay attention to that. And I'm seeing if they're going to violate that low first before then maybe give me a market shift. Then I'll start getting the buys to go higher. So, I mean, you can look at this and study this real quick to see how you probably could have taken advantage. And I'll, encourage you to go on your euro pair, go on your currencies and start paying attention to that. Because at the end of the day, it is a game of psychology. And if that's the case, you need to know where the buyers and sellers are every single time. Do not just trade a pattern. You need to understand what is going on, who is getting hurt, and who's enjoying at each time of the game. And then sometimes it might just be a build-up on both sides of the market, which is a consolidation, which is like right here. No one's getting hurt. Within this area, no one's getting hurt yet. And you want to find where there's going to be pain, which is going to be the manipulation, which is here. And once you start going higher, it's common sense that it should take out this as well. Same with here. As we're in this level, no one was hurt yet until they started going lower. And went a little higher here, but went lower again to really hurt them. Before then, breaking higher. And it took too long to go higher, so I got out and I had to go to the store. But enough of me. Long story short, it caused pain, shifted higher, and they gave us a clear PM session trade, which could have been taken to run higher. At least you expect these sides to be taken out. So I hope that was helpful. I hope that was insightful. Once again, follow, subscribe, drop a comment. Let's get this video some views. And I really would appreciate y'all. I mean, that encourages me to keep going. I think I'm almost at 300 subscribers, so I really appreciate y'all, honestly speaking. Let's keep the channel going. Let's get to 500. Let's get to 1,000. Let's keep it moving. You know what I'm saying? I appreciate y'all. I want y'all to have a colossal day, colossal week. I hope you make some colossal money. So I'll talk to y'all later, and have a wonderful evening. By the way, go Astros. You know what I'm saying? H-Town.